Well, hello, everyone. Welcome back into the Invest Well Show. We're here today with a few great friends and business partners. We're going to talk to you in this show specifically about life after the sale. You know, one of the things that happens oftentimes for those of you that have built companies or are currently building companies is you can find yourself kind of in no man's land, unknown territory, which is getting close to the reality that you're looking to exit or sell your business. But then when you sell your company, it's kind of almost like winning the lottery. You're in a place where you have this big amount of money, large amount of assets now that you've obtained. You move from creating income from your business. You move from maybe writing certain things off that you might use as your daily expenses. And you're now in a place where you have this asset that you need to say, how do I take these investments and ensure that after I've made this sale, I can still have the kind of income that I want to have. I can still make sure that I maximize my tax savings. I can still kind of live the life that I want to live, but also find purpose on the journey. I've invited Steve Snowden and Nick Geraci to join me on the show as well. And guys, this is something that, Nick, obviously you operate as our private tax director at Wall Private Wealth. Steve, you've operated as a kind of new business development advisor, so to speak, at the firm. These are things that are important. And so maybe I'll start with you, Nick, because you've kind of come to the scene, if you will, with more of a CPA lens. Because you've been in that space for 15 years. Your father was a CPA for 30 years. It kind of runs in your blood in a lot of ways. And this is just something that's important. And I don't think it's something that a lot of people think about. They think about this idea of, maybe their business, they want to sell it, they want to get out, they want to get the monies out of the company, they want to take the fruit off the tree, if you will. But they don't often think about like what it actually looks like after the sale. So let's jump into that a little bit. What are some of the things that you've seen over the years? As at some of the firms that we've done, they've created planning for clients like this, families like this. What do you see that's important for people to be mindful of after the sale?
Yeah, Mike, we've seen this happen and unfold in a number of different ways. We've helped serial entrepreneurs grow their company in a tax efficient way, sell and try and maximize after-tax proceeds. We've also seen people sell family companies, things that they've owned for years and years and years, and now it's time to exit. And in various different industries. However, one thing that is consistent after the sale is people want to know what the next step is, right? And a lot of times they're not in a position where they've thought about what to do afterwards. They're not making the best decisions. All of a sudden, instead of having this business where they're the main operator, where everyone's coming to them for direction, instead, they're just sitting on a pile of cash. And a huge mistake that we've seen several times is the reflex reaction to immediately redeploy that capital.
Yeah.
Without being discerning, right?
Well, listen, I mean, Nick, it's the idea of this. You're almost in a place where, again, you're like, you got like the runner's high. You're running the race. You have a goal. You're going towards it. It's far away. And then you get there, and it's kind of like, what now, right, Steve? This is a big thing, and it's not just the idea of what they invest in. It's also the idea of kind of like, it's almost like the rug has been swept out from under them because something that's given them daily purpose in a lot of ways, whether they loved it or hated it, it gave them daily purpose for 10, 20, 30, 40, whatever years, and now it's gone. And that could be scary. I mean, this is a big thing, Steve.
Yeah, I mean, I think all of us like control in a lot of ways, especially control over our own finances. And if you're a business owner, as you're growing the company, the key to growing your business and making more money is to keep pouring it back in. But then you get to a place where now you just have this giant, call it pot of gold that you got from selling your company. And, you have a feeling of, I don't have control over this anymore. Like, how am I going to get income from this whenever it's something I just haven't done in the past?
Well, one of the things that I think of is, I'm a father of 5. And at the end of the day, as the kids get older, right? You're in a place where when your kids are younger, it's pretty easy, when they're 3, 4, 5, hey, do this, do that, do this. You're wearing this, you're not going to wear that, that kind of a thing. It's pretty easy to do that. But as they get older and they start to turn into teenagers, and for those of you that are watching this, that you have teenagers, you know exactly what we're talking about. They get to the place where they kind of want to make their own decisions. They kind of want to step out on their own. And it's finding that balance of like, how do you really direct them to make good choices, but also give them some rope so they can make their own decisions? That's hard. It's a new transition. And selling a business in many ways is like you're now making decisions in this new experience of life, there's a massive vacuum. Even so much so that, the very next day after the sale, you wake up, unless you're being kept on for a year or 2 or 3 as some type of a consultant back to the business, guys, you're waking up the next day and you're kind of like, what do I do with myself?
Yeah, it's that transition from being an operator to being an investor. And a lot of entrepreneurs have that. It's not a switch they can just turn on and off. And it leads to mistakes. That's why, it's important to have a solid team to help you with that transition, to provide you with intelligent options and really walk you through what those next steps should be.
Well, you said something earlier, Nick, that I think is important. You talked about the idea of somebody sells their business and then they find themselves in a place where they just want to go redeploy that capital. Like, let's get it moving, because their mindset is growth. Nothing wrong with that. But it's like, let's get it moving, because it might take a month, might take 2 months, might take 3 months, might take 6 months, but at some point in time, they're thinking about redeploying that capital. But the challenge is they're often redeploying it they're redeploying it. Now they have larger amounts of money than when they started. So when you start, you're in a place where, you're really not taking as much risk because you don't have all the money that you have. When you sell a business, now you get all this money. And so you're like, I'll put 10 million here. I'll put 20 million here. I'll put 100 million over there, just kind of see what happens, thinking that you got this big pot of money and you're going to be okay. But what happens is this kind of fear of missing out. You're deploying assets faster than you really know what's maybe appropriate for you to do. And it's not really, I think this is the important thing, guys. It's not done through the context and lens of actually creating thoughtful planning for the wealth.
Right? A lot of people just failed to think about the lack of income, right? You're putting 5, 10, 20, 50 here, and here, thinking that you're going to be making these great returns, and maybe you will. But what you don't have in some of these cases is a steady stream of income, which you've grown used to while growing your business, while running your company. So it's important to think about that. It's not just about investing in a way that is going to return your capital in a high growth fashion, but also maintaining your way of life, your daily comforts, the things that you've become accustomed to. We want to be able to maintain that without that income from the business, which is why it's important to deploy things not just in capital markets or in growth type investments, but things that provide you with a tax efficient rate of return.
Yeah, no, I think it's important. And so the idea here is, let's give some practical tips and thoughts to business owners, because we've seen this a lot. And if you're watching this, as you're watching this or listening to this on podcast, whatever it is, my challenge to you is to determine where you are in the phase of the sale. Maybe you've just sold the business. Maybe you are in a place where you're preparing to sell your company. Maybe you're in a place where you're saying, you know what, I would love to exit this company. I've entertained some offers. I've gotten some appetite. And hopefully the next year, 2 years, 5 years, I'm going to sell the company. Well, our strong encouragement to you is to make sure that you prepare in advance and kind of get the right planning in place, so that way you can maximize your number on the exit. Make sure the contracts that you sign, right, are done in the best interest of you, not just a private equity company that wants to purchase your company. And maybe you're in a place where you've literally just sold and you're kind of experiencing some of this new euphoria of, I'm not sure exactly what to do. And so let's practically, guys, give folks some ideas. I'm going to start with the first one. Steve, you can go maybe with the next one. But my thought initially is, it's okay to slow down. I've been in the financial space myself in different capacities, owning different companies. You guys know this. Many of you know this as you're watching this, for almost 26 years now. And what's interesting to me is people, when they get running at a certain pace in life, find themselves in a place where they struggle slowing down. And sometimes when we run too fast and with haste, we make bad decisions. And so I think it's important. Step one, my opinion and advice would be to slow down. And just because somebody's got advice that they might be getting from, a friend that's been a financial advisor for years, or a CPA that you've known for years, there's nothing wrong with that, but not everyone specializes in the same lanes. Just because people sell automobiles doesn't mean all the cars are the same. So we want to make sure, what are we actually trying to achieve here? And that can only be started with the process of slowing down. Now, one last caveat, and then Steve, I'm going to pivot to you, is simply the fact of, if you've sold your business, let's say you sold your business for $100 million or $200 million, or even $10 million, guys. Let's think about it. If somebody's 60 years old and they've sold their business for $10 million and they not decide because they can't make that decision. Let's say they live another 40 years, right? I mean, it's 100. Let's say they live another 30 years. That's 90. Well, if you sold your business for $10 million and you just take income from that 10 million, like you don't make another dime, but you don't lose another dime for the rest of your life, you're probably going to be able to live. You're probably going to be okay. Now, I'm not saying you want to live just on that. You want to maximize the wealth, but when you start to think that way, it actually gives you the ability to start to slow down. Obviously, there's lots of conversation about creating legacy, next generation, all that goes with that, maximizing the investments. But when you think that way, it gives you the ability to kind of start to slow down. Take a breath. That's step one, in my opinion, of one of the biggest things that I've seen over the last 26 years of helping families is there's too much haste. Steve, what are your thoughts?
Yeah, I think that leads right into my second point. We say this all the time. A lot of people don't know what they want because they don't know what's available. And if you don't slow down, you're not going to be able to learn what else is available out there and the type of planning that you can achieve. I think one of the biggest keys to success whenever we help people sell their companies and then do the planning afterwards is the client being a student. They're willing to step back and learn. We spend a lot of time educating them on the options, a lot of the tax planning options, a lot of the different investments, the way that we see investments and the success of off-market planning. And if the client is not open and willing to be teachable of a lot of these topics, chances of success and in order to maximize their wealth just isn't as strong if they're not open to it.
Well, you know, Steve, I think that's important because, I mean, let's think about it, guys. How many times have we seen over the years where someone that sold their business by default ends up just putting their monies basically in the market? Bonds, stocks, ETFs, mutual funds.
It's almost like it's automatic for some people.
Well, it kind of is automatic because this is what they've been hearing for years and years and years, and it'll diversify and all these companies, all of these things. But the problem is it just has not been necessarily, in a lot of ways, some ways, the best performers. And when I say the best performers, I'm not always talking about rate of return, right? I'm also talking about the idea of reducing market volatility, because now you're in a place where, you know, when you were younger, you were participating in dollar cost averaging, maybe if you were investing along the way. If you weren't investing along the way and you owned your business and you were reinvesting back into your business, that was your investment. Well, now when you're retired, you're actually participating. You sell a business, you're starting to take income from that asset. You're participating in reverse dollar cost averaging. Like you're taking monies from your portfolio's income. You're looking for the paychecks from the portfolio's income. And as you're doing it, if you're all in the market and the market's up and down and up and down and up and down, that affects your overall portfolio value. So I think that's so important. You talked earlier, Steve, about the idea of educating families. Obviously, you know, the sponsor of this show, Wall Private Wealth, we have several different financial companies that do different things. By the way, if you have questions, leanonthewall.com is a great place to go. But, you know, one of the things that we've seen over the years is really this idea that education, people really appreciate it. They enjoy it. This isn't like you got to go to college and get your PhD and you're going to have to spend all of this time, 40 hours a week studying. There's going to be a test. No, the test is how you'll live out the rest of your life. So, you know, you're never going to get any younger than you are right now. And you're in a situation where you have a fair amount of wealth if you've sold your business. So it makes sense to slow down and look for some education to help you create, implement, and do strategy that might be different than what you're used to, but is what a lot of wealthy families throughout the country have done. We've been blessed to work with many wealthy families throughout the years in different capacities. And it just matters to say, let's take some time to get this right.
Yeah, and there's really two things that I've seen families get fixated on in regards to what they're worried about. Number one is the big tax bill that they know is coming. And most of the time they have no idea what it's going to be. So it kind of just causes them to be at a standstill. You know, I'm just not going to do anything until I figure it out.
Analysis paralysis.
Yeah. No, exactly. And then the second is this going to give me enough income that I'm never going to have to work again? And those two things together can cause us to really be in a serious place of paralysis where we really don't know what to do. and the CPA is not talking to the financial advisor is not talking back to the CPA, and it really causes our client or the clients that are in those situations to be in a poor position.
Yeah, one of the first things that we talk about these families with who are selling their companies is what do you need to survive, to maintain your standard of living? What does that income level look like? And I can't tell you how many times on that first conversation, their answer is deer in headlights. I don't know. I mean, maybe 300,000, maybe 3 million. Like they have no clue what the answer to that question is. And it's, go back to your point of slowing down. You won't be able to figure that out if you're just going 1,000,000 miles an hour. You got to sit back, look at your life, not only look at what you're living like right now, but, are there needs for younger children to go to college? Are you looking to buy a new house? Like these things, and no matter how good of an advisor you are, if you as the seller don't spend the time, invest the time to figure this stuff out for yourself, there's going to be gaps in the long term. And I'd like to actually talk about a specific example.
Well, I want you to do that, Nick. But before you do, I want you to think about this for a minute. So why? The question is why? So if you're watching this and you're like, I really don't know. I have a general range, but I don't really know exactly what I need to live on, right? Most of you that are entrepreneurs, you don't like to be boxed in. So if you're in a place where you feel like, well, I need this much per month or this much per year, that can feel like you're being boxed in. You don't want to do that. I get that. And so, one of the reasons that that's the case, Nick, I mean, let's think about it. As people own businesses, they've been entrepreneurs, as men and women own companies, like the solution a lot of times to problems is go make more money. Right? So it's like, I know how to do that. I know how to go make more money. I know how to take my sales and revenue up 10%, 20%, 30%, 100%, whatever it is, year over year. I figured that out. I got that part of it. And so when they move into retirement, they're just not thinking like, okay, we have to have, not that you're going to quote, be on a budget, but just be like, you got to start thinking about some of these conversations and some of the expenses maybe that you were running through the company before are now not going to be able to run through the company.
Because there's no company.
Yeah, I mean, there's a lot of things. Exactly. So there's a lot of things that actually are going to change.
Yeah.
And you're just not thinking about that. So it really is a big decision. And slowing down is, again, the key to all this. And listen, as you're watching this, I got to tell you, we've helped a lot of families exit well. We've helped a lot of families save millions and millions and millions in taxes. We've helped a lot of families in a situation with the different companies that we have position their wealth from the sale of their company in such a way that was well diversified and a lot of great off-market opportunities that really have produced great yield and growth opportunity. But yet at the same time, the conversation is very heavy on creating a real game plan for the next season of their life. That's not just going to happen day 1, day 2, day 3. It's going to take time. And just like hiking and climbing Mount Everest, which I have never done, but if I did, I would want to do it with somebody that's been there before, hopefully multiple times, because they know what to look out for. Hey, don't step over here because that's where it's a false front. You could fall off the mountain. That's one of the benefits of what we've done is we've really stayed in the lane of working with wealthy families that are exiting at a high level instead of just like, oh yeah, we're going to work with Johnny over here that's starting his Roth 401k or start with, this person over here that just kind of along. We've worked primarily with wealthy families. And that's kind of been our space and lane for years and years and years, which is one of the reasons I believe we've done such a great job with families in that lane specifically. But Nick, you wanted to talk about something that as an example. Please share that because I think it's important to know.
It goes right along with what you're saying, and it's a perfect example of getting the wrong type of advice. So we have a family that was actually referred to us. The company sale actually happened a few years ago, so it's a lot after the fact. And the reason why they were being referred to us is because they feel trapped. They're getting really big tax bills every single year. It was a $35 million sale in that ballpark. And essentially what their advisors told them to do is they put it all into the market. There's basically no income producing stocks. There was no conversation around what their goals were. They went out and bought it. They borrowed against their assets through the bank that they're invested with. They bought all these fixed assets, not income producing, and they're now sitting in a position where they're selling off equities just to support their daily life. And when we did our analysis looking at their account statements over the last 3 years, it's been completely flat. They're selling off in times when they shouldn't need to. The income that they're getting is not tax efficient, and the stuff that the tax efficient income they are getting is not enough to cover their lifestyle. So they're in this vicious circle where they've borrowed against their investments, so they can't really move them. They're stuck where they're at. We're trying to figure out a way to help unwind it right now, but it's a perfect example of not having the right guidance up front, coming into a huge amount of money. Like, that was a bit of a surprise to this family. They weren't like expecting to exit so soon. And now they're in this vicious cycle of taxes, selling off principal, and just feeling stuck.
Well, and to think about it, I mean, you gotta live. So is it whether you want to sell or not? It's irrelevant. You know, you have to sell. And unfortunately, I mean, let's be honest, guys. A lot of the portfolios that you see out there, you know, from a lot of the big firms and people that you know, is I mean, it's pretty plain vanilla. It's stock market blended between a bunch of equities. It's ETFs. It's mutual funds. It's, you know, maybe a splash of real estate and, you know, real estate investment trusts or different things like that. It's bonds. It's munis. It's pretty much everything in a lot of ways that has to do in some way, shape, or form connected to the markets.
It had nothing to do with how they made their wealth in the first place.
But that's exactly the point. And so I think one of the things that differentiates our thought process as we connect with folks is simply the fact that we are coming at this from an entrepreneurial lens. That is very different. And that's one of the reasons when we look at adding certain pieces into the portfolio, it's done in really from a business planning perspective, not just, hey, you got this asset, now let's go put it in this account with X amount of munis, X amount of bonds, X amount of treasuries, X amount of, you know, whatever, you know what I'm saying? And then you get equities and diversify, and we're going to be okay. Here it is. We're going to be okay. Instead of really saying, all right, let's think about this. What if we take this $100 million sale and we take 20 million of it and we use this piece as the income division, right? And we're going to generate 10, 12, 15% a year of income through things that have been tried and tested, right? That are in the portfolio and that are available. Now we're in a place where we check the box on the income needs, right? Because that's going to generate us 2-3 million a year in income, whatever the number is. Then you take the other monies and maybe you segregate out another piece of the monies, and that's for legacy. You know, maybe you maximize life insurance on that piece, or you add some additional things in general to that piece, and that's the legacy play. That's the legacy piece. And then you have another piece of the asset that's the rainy day fund. You know, God forbid something happens, long-term care or this or whatever it is, you have that. And then you have the rest of the assets where now you got $30-40 million left in that 100 million stack, as an example, where you got this is the stay and play fund. You know, anytime it makes over X amount per year, we're going to take it out. We're going to use it to take the family on just an amazing vacation somewhere, or buy an incredible car, or, you know, whatever it is. It's just this idea of being thoughtful around what we're doing instead of just throwing it out there and saying, well, gosh, you know, I don't want to lose anything, so I'll just put it in munis because it's tax efficient, or I'll put it in these bonds because they're safe, when the reality of it is they're really not that safe.
Yeah, well, what you're describing is what I referred to as like the check the box advisors. Like, they go through a list of things that they think is appropriate for a family that they're advising. Well, I need this much equity, I need this much bond, you know, and they're not really getting to know the family and what their actual needs are. It really highlights the value of holistic planning. Whenever we're doing these company sales, we spend more time just getting to know the people, right? We go through like our list of questions, which just comes up naturally, but all the while we're documenting this to make sure that we're going to be able to meet the needs of what they want now, but also a few years down the road, right? So check the box advisor. That's something that you don't want.
Well, and they're also in a place a lot of times where they're using technology and they got this app.
And Monte Carlos.
It makes you feel warm and fuzzy. Yep. And you're like, hey, there's a 99.9% chance that you'll never run out of money if you do whatever. And it's like, the reality of it is a lot of that stuff is BS. It's all hypothetical. And, you know, so at the end of the day, there's just so many factors that I know it says it includes all of these factors, but the reality of it is it doesn't often connect or equate to what someone's need actually is in their daily life. I mean, that's just what we've seen over the years. You guys remember this? There was a couple companies, I won't name them. You can Google this if you want, but there are a couple companies where they use the same software. Did you guys see this?
Yeah.
They literally use the same software that creates probabilities of whether or not you're going to run out of money in your future. They use that same software to try and predict based on all the statistics of the players and, you know, all this stuff, of who would win the World Cup. And there was I made 10 million simulations run. I can't remember what it was. Bottom line is they didn't even pick the teams that went to the playoffs. It was they were way off. And of course you don't see that anywhere, but it's they were all proud of it initially. And then this is going to be amazing. We'll tell you whatever in advance. And then you don't hear about it. Why? Because it was completely wrong. And so we're not saying that software is always completely wrong, but I'm from the old school. I'm from the school that if you can't sit down and write on a whiteboard and write on a notepad and talk about, all right, here's how you put a plan together. I want to be in the car with somebody that if the tire blows, knows how to get out of the car, pop the trunk, pull out the spare, and actually put it on. That's the kind of ride in life that I want to be with. And that's how we've built our system. And it's kind of ground up. There's a lot of grind and hustle that's come in to us learning what we've done. Now, we've had a lot of accolade, part of the Big Board Club and commentating for media for years, CNBC, Fox, Bloomberg, writing for the papers, helping a lot of families. But the reality of it is when things go sideways in life, and they will, guys, stuff's going to happen. You want to be with somebody that knows how to change the tire in the car. Period. End of story.
I mean, I think one of the favorite things about what we do is how we help families live boldly and confidently, because finances are stressful and they leak into a lot of other areas in our life. And whenever we're able to build out a tailored plan that is, the clients know what the expected tax bill is going to be. They know confidently that we're putting together the right tax planning and the right structure for them. They know that we built an income plan that is tailored to exactly what they need on a monthly basis. And they know that their wealth is still growing over time, even with the income that they're taking. It's just really cool to see them enjoy their lives in a confident way.
Yeah, we've seen that a lot. I mean, there's a guy, in Texas that we saw him. I mean, he's getting his health back. He's on point. He's got the joy is coming back in his eyes. He was underwater with his business. And now as we've created a lot of this planning, I mean, it's just been a beautiful thing to watch.
Uncertainty certainly takes a toll on you, and it is a wonderful thing to help families get through that in a strong way.
Yeah, Nick, anything else that you want to add before we kind of land the plane on this? We're just kind of talking about some ideas to help people think about this after the sale, and it's important. What are some other things or any other thoughts that you want to kind of...
I mean, let me put my CPA hat back on one more time. When you sell your company, don't be distracted by that top line number. There's a lot of work that goes into keeping that number high after you file your tax return the next year. That happens through intelligent negotiation on the front end, making sure the contracts are in there, making sure that the team you have advising you at that stage of the game is cognizant of the tax implications of what's going on in those contracts, right? You can have a great business attorney that makes sure from a liability perspective, you're covered. But if you're not looking at it from a tax lens, it can really come back to bite you. Go to file that tax return, all of a sudden you owe $14 million that you weren't expecting. I mean, talk about a shakeup, right? So keep in mind, after-tax proceeds are as important, if not more important, than what that top-line sales price is.
Well, it's huge because you're in a place where, we've always likened it in the years past to IRAs. When somebody looks at an IRA account, like, hey, I got $10 million in my 401k or now my IRA.
No, you don't.
No, you don't have $10 million.
No, you don't.
You got like $6 or $7 million.
That's right.
Right. The government has the rest of that. So same way with your business, depending on how you exit your business, depending on how the money's taken, depending on how much liquidity you want to maintain or keep. And by the way, a little buyer beware. We've also seen this, guys, where there's a lot of attorneys out there, well-meaning, nice people that want to take the sale of your asset, take the sale of your business, and essentially take that sale and put it and lock it up into all of these kind of, quote, special trusts, which in a lot of ways creates an annuity for them long-term because they have to service it annually, and kind of come alongside.
And no one knows what's actually going on because they're so complicated.
Yeah, it's so complicated. People aren't really familiar with what's actually happening. It's a big mess. And so the good news is, as you're watching this, there are ways to exit your company without creating all this convoluted trust work. I'm not saying trusts are wrong. I'm just saying there are things that can be done to maintain liquidity. But then you also want to be in a mindset of, if you're going to sell your company for X amount of dollars, 20 million, 50 million, 200 million, wherever the number is, keep in mind that if it's not structured correctly, that sale number, Nick, as you mentioned, may not be the actual and probably won't be the actual number that you get unless you structure it properly. That doesn't mean you're going to eliminate all taxes, but we've seen in many, many ways, families, we've been able to reduce their tax bill 20, 30, 40, 50, 80, 85, sometimes more % on their sale. And it's a real thing. Without planning, you're going to get hammered. With the right planning, and the challenge sometimes, guys, is simply the fact that, you can sometimes feel safe because you're like, well, I got a CPA. He's a tax guy. This is what he does. But unfortunately, a lot of CPAs, as we all know, they might be great people, but they're historians. I mean, they're looking at what you spent last year, what you made last year, and they're saying because of what you spent, what you made, this is what you owe. And they're not really proactive. We were literally golfing the other day with a guy that literally just sold his business and a little over $100 million. And he's in a situation where the conversation was, my CPA told me that my job is to keep me from being audited and basically keep me out of jail. And I'm like, well, of course that should be their job, but
You can do more than one thing.
you can do more than one thing. And oh, by the way, there's no guarantee that you're going to keep from an audit. I mean, there's just no guarantee of that.
Sometimes your number just gets pulled.
Sometimes the number gets pulled. That doesn't mean that you do things to create flags, but it does mean that you do things in a way that it's methodical so you can maximize the strategy. And he was just starting to realize that. He's like, you know what? Time out. Like, why would I just pay more? And it's not because he didn't like his CPA. What he started to really understand is his CPA was a great person and did a great job in the lane that he was good at, which is tax preparation and tax filing. And that's, quite honestly, you may not think about it this way, but a lot of CPAs do a great job with tax preparation and tax filing. Not all, but a lot. But that's very different than tax planning, proactive tax planning, utilizing the code, understanding strategies that can come alongside to really significantly reduce the tax bill.
Tax planning is an art. It's a completely different animal than preparing a tax return. Preparing a tax return, your mindset is rigid. There is numbers that you're given from the client that go on line A, 1A, 1B, 2A, and it's very mechanical. Tax planning takes a certain fluidity of mindset in order to see the big picture, and put together a holistic plan that is covering each of the bases that are relevant in a company sale, like what the structuring looks like, what happens, if X amount is allocated to this type of asset, right? And most CPAs are in a position where they're so bogged down with the preparation of the returns, it's very difficult to make that transition and zoom out a little bit and see, what is actually going on here. And then the kicker here is, once you understand what's going on, how do I improve it? How do I make recommendations for strategy? How do I make tweaks to the contract? How do I, reinvest in certain tax efficient vehicles that allow you to minimize what the actual tax bill is at the end of the day? These are not things that go through 99% of the industry's brains ever.
Well, and listen, Nick, I would say, and Steve, you can speak to this a little bit too, but it's not the CPA's fault. Like, if you're a CPA watching this, we're not dogging CPAs. I mean,
I am a CPA.
He is a CPA. Yeah, but the reality of it is it's not their fault. And here's what I mean by that. What I mean by that is their job, as I mentioned before, oftentimes is to do tax prep and do tax filing. And for them to be honest, if you're a CPA watching this, one of the best ways you can add value to your clients, right, that's literally looking to exit and sell a business, is if you're honest with yourself and let the ego get out of the way, let it go, and just say, am I really well-versed, really, honestly well-versed in advanced tax planning, helping business owners reduce their taxes 30, 40, 50, 60, 70, 80% or more on the sale of their companies? That's something that I spend a lot of time doing. Or am I in a situation where, I have to file 1,000 returns or 2,000 returns, or whatever the number is, every single year? And quite honestly, just because of the due diligence and the additional training and the classes that are needed to keep up to date and all that, like, you just don't have the time to learn something new. And when you have time off, because tax season's a lot of work, you're in a place where you're just like, you know what, I need a break.
And as you well know, we're very collaborative in our approach. A lot of times we'll come alongside families, existing teams, and add value where we can. We'll fill that gap of the advanced planning and strategy while working with the team that's already there.
Yeah, we're not trying to fire the CPA if they do a good job. Yeah, no, 100%. And you know what's been neat about our interaction as well, I obviously come from more of the investment side. I mean, that's the side that I've been on for the last years and years and years and years and years. And I've kind of dove much deeper into the advanced tax world over the last 10, 15 years or more. And, you know, really collaborating with Nick and his team. And as we've come together, you know, Steve, it's been a wonderful thing to be able to see clients and families that we serve have the opportunity truly, genuinely, to have, we'll call it that, you know, comprehensive approach.
Yeah, I think whether you're a high income earner or you're somebody selling your company, what is your biggest risk? What do we know for a fact is going to cause you to have less money? Is taxes. I mean, it really is the biggest risk that you have. And there are a lot of ways. You guys have seen the IRS code book. You know, it's thousands and thousands of pages, and a lot of it is how to reduce your taxes. So, you know, really, you know, Nick, I give you a lot of credit for the research and the diligence and the great team that you have. You know, you have members on your team that teach continuing education for thousands of CPAs all over the country. We spend a lot of time looking for strategies that are not only compliant, but are going to add significant value to reduce that biggest risk that I just talked about.
You kind of said it, Steve, which I love. I mean, the playbook's already there. It's called the IRS code, right? So it's not like we're not creating something that doesn't exist. We're just taking the time to dive into the code. Imagine being in a situation where you were going to play your greatest opponent on the football field, and you had their playbook, and you had the ability to literally memorize their plays and understand what plays, when it's 4th and 2, what do they typically do? When it's 1st and 10, when it's 2nd and 4, when it's 2nd and 9, when it's 2nd and 20, you know, like what are the plays when it's goal line defense? What are the plays that they typically do? You had their playbook, and you had the ability to kind of dive deep and learn their plays. And now you get on the field and you play that team. I mean, you're in a place where you're like, oh, look at their formation. We know exactly what they're doing, right? And so the reality of it is that's what we're doing basically. The playbook was given to us. We didn't create it. The IRS uses it. In fact, a lot of the folks there don't fully understand it themselves. I don't mean that to be unkind. It's a lot of information. So it takes years and years and years of time and research, and people that are, I mean, I hate to say it, geeked out in that stuff. That's not me. That's why we got people on the team that do that.
Thanks, Mike.
But the reality of it is, you know, imagine being in a place where you are going to play the biggest game of your life, and that game just so happened to be selling your business, and the opponent, unfortunately, is the IRS, and their job is to keep as much of your taxes as they can, and your CPA is in a situation where he's kind of putting a block in the middle, but it's not a great one because he doesn't really know the playbook either. But now you're in a place where you've had the opportunity to connect with a team that studied the playbook and knows exactly what formation to run when we see this kind of defense, so that way we can maximize and get it to the end zone. I mean, now we're in a place where we're talking about millions and millions and millions and millions of tax savings, which then obviously is invested, which we help families with some of the different companies that we have, and to help them massively grow their wealth. So think about it. You're literally growing an investment, not only on the asset that you've sold, but you're also growing an investment on the taxes that you would have paid. And those monies are now growing for you over a 5, 10, 15, 20, 30, 40 year period of time. You're talking about serious growth that may not have ever occurred. It's a big deal. So the bottom line, everybody, is, listen, get the playbook. Chances are you're not going to be in a place in life where you're going to spend time studying the code. Here's what is probably going to happen. You're going to watch a video from time to time on social media. You're going to watch something on YouTube. You're going to hear a few interviews on TV. Listen, I've done the national media thing for 6 years, CNBC, Fox, Bloomberg, all that. And quite honestly, one of the reasons that I stopped doing it was not because I didn't enjoy the rush of it. I stopped doing it because I just thought about, like, what value, honestly, what value am I really giving to the consumer that's watching this? I want you to think about that for yourself. Maybe you've watched Squawk Box. I've been on that show before, right, with CNBC. Maybe you've watched After the Bell with Fox. Maybe you watched other shows with Fox or Bloomberg or whatever. And, you know, when you think about it, if you've watched the show, or you've read the Wall Street Journal, or you've read the USA, you know, whatever it is, Kiplinger's, you're in a place after you've read that or watched that, and you say, okay, how much value has that really added to my actual investment and tax portfolio? And the answer is not much, or it shouldn't add much, because at the end of the day, we never want to be in the business where we're taking advice of what we should or shouldn't do with our direct investments from someone that doesn't understand our situation personally. But one of the keys, guys, is making sure that folks and families are in a place where you find someone that literally specializes in the lane that you are in. So if you've built a lot of wealth, you're selling your company, you've sold your business, you're sitting here on your, quote, pot of gold, right? And you're not sure exactly that the planning that you're getting or have is the best for you. I'm going to challenge you to take a minute, slow down, and self-servingly reach out to our team. We've done a great job in helping families in over 36 states in America, some of the wealthiest families in America, create planning that has actually helped them understand the playbook so they could make better decisions, save more taxes, and invest appropriately. Listen, thanks for dialing in. Thanks for tuning in. Share this with someone that needs to hear it. And I want to challenge you to take the time necessary to get the right information so you can make great decisions around your wealth, family, and your legacy. Talk to y'all soon.